I'm going to take you briefly through how to do a simple trust, but I do have instructions in Blackboard that I'd like you to read and follow through. So the first thing we're shown are the three columns of information here. The book column is simply all of the income and the expenses of this trust. The second column I want to look at is the tax column. Tax stands for tax return. These are the numbers that it would actually show up on the trust tax return. You notice there's nothing here for tax exempt. There's nothing down here for federal income tax because that's not deductible. These are the items that show on the tax return. This middle column for accounting, these are the numbers that get allocated to the K1, or in other words, get allocated to the beneficiary and will be taxed to her, in this case, not to the trust. So, to get into the return, the first 17 lines here, these all come from that tax column. You'll notice that this ends up being $34,295, which is the same number from the tax column. This is the total amount of income that must be taxed. What we have to figure out is how much is taxed to the trust and how much will be taxed to the K1, or the beneficiary. So from here, from line 18, we need to jump over to Schedule B. In Schedule B, I assume you guys can read all these instructions, but a couple of them are a little bit tricky, so I'll let you know what those are. Line 1 would come from line 17 over here, $34,295. Line 2, we will not have that on our homework, but that would be tax-exempt interest. That would be the $5,625 from the example, minus, this is the tricky part, $120 worth of expenses that were allocated to the tax-exempt income. This is a little more involved than I wanted to get into, so just know that $120 of the expenses are from generating tax-exempt income. So $5,625 minus that $120 would be $5,505. Again, I don't want you to worry too much about that. The $15,700 are the capital gains that are allocated to income. Okay, so even though this is on its side here, it's a $15,700 allocated to income or to the beneficiary. The 19.7 here are the total capital gains. Okay, then you add those up. Line 9 is the total accounting income from that column. Alright, the 36.9 from over here. The rest of these you can just follow the instructions. This 5505 again is from line 2. And then ultimately we end up with $30,295. What this means is this is how much will get taxed to the K1 and not by the trust. So we're going to subtract that $30,000 from this, meaning only $4,000 will get taxed to the trust, and this remaining amount will get taxed to the K1. We also get a $300 exemption amount, so that means instead of $4,000 taxed to the trust, we'll get taxed on $3,700. Alright, now, because the income is all from capital gains, we will pay tax at the capital gains rates, which means any income that's in the lowest tax bracket, so any income that's in the 15% tax bracket on the front cover of your book will get taxed at 0% if it's a capital gain, and essentially anything over that is going to get taxed at 15%, just like with an individual. And you can see that in your instructions in the Quick Finder. Alright, the last thing we'll look at then is the K1. And again, I know I'm going kind of fast here, so if you have questions, you're going to need to contact me. Here's the name of the trust. Here's the name of the beneficiary. Line 1 is the total interest income minus all of the expenses from the tax column. Interest income minus all expenses from the tax column equals 5420. These are the dividends that are taxed to the K1. And that'll be from the accounting column, and then the 15,700, those are the capital gains taxed to the K1. When you add up these numbers, it needs to add up to the 30,295, or if the numbers have changed over the years, this must equal the 30,295 that we came up with over here on line 18. Okay, we'll transfer that number down here to 14, and then right here will be our tax-exempt income, again, which we've seen before, which we won't have on our homework.